Today we can celebrate a rise in the stock market because that apparently puts money directly into your pockets. But as we look deeper into this, we realize that this is a different picture than what the mainstream media and the government have created for us. Today we will discuss the stock market boom while the real economy crashes. You came here for the truth, so let me unveil that for you. Let's get into this article right here, and it is talking about how the U.S. stock prices rallied on Monday with the NASDAQ crossing 5,000 for the first time in 15 years. So let's flip back in the pages of history where we had the dot-com boom. Completely unjust levels for stock prices for companies who essentially were just an idea and being fueled and funneled with all sorts of money when there was never actually any substance. This is just the same as derivatives. When there is no substance there, just simply an idea, money is being transferred in that direction. So we'll move on to the next sentence. While the dollar touched an 11-year high on expectations that the Federal Reserve will raise interest rates later this year. So they haven't done anything. It's all based on expectations. This is one other note that I want to make. First of all, the fact that the dollar is continuously becoming stronger, even though the whole world knows that the dollar is doomed. But simply for the time being, they need a place to put their money. And quite frankly, the dollar seems stronger because of the Federal Reserve, the lender of last resort. So just to move on here, we are still in a longer term economic expansion. This bull market still has some room to grow. That is the general consensus of the people in the finance industry. You have a few contrarians here, but essentially they're saying, look, this is a perpetual boom. We're going to have this forever and ever until it's too late, of course, and then they admit that everything is bad. But right at the bottom, just want to note, China, which has posted its slowest growth in decades in 2014, cut its benchmark lending and deposit rates. That's what happens when things get desperate. You have to get out there and reduce the rate. So at least that's what they believe that they have to do. And China is doing that right now. They're definitely not the only countries doing that. Well, I'll move on for a moment here. The hype surrounding the NASDAQ 5,000 overshadowed by the day's broader market action. Look at this. The S&P is up. The Dow Jones is up. The Russell 2000 is up. All record closing highs. And why? Why exactly are the stock markets increasing? Well, is it real investment flooding its way into the economy and it's causing this massive boom to occur? Well, I would certainly like to beg to differ here. Further down, we see this another individual here. We're certainly not in bubble territory. Absolutely. Using all these probably less than a handful of indicators, they determined that this is not a bubble. But of course, in fact, it really is when you think about it. Now look at this. This is out of Bloomberg. Bank of Japan stands ready to buy every new bond Abe's government issues. That's right. The Bank of Japan, the central bank of Japan, is in fact going to print so much money that they are going to be able to buy every single bond that this government can issue because the debt keeps piling up. So instead of actually getting people to buy their debt because no one wants it, they are simply going to just print up money and buy up that debt. The Bank of Japan's expansion of record stimulus today may see it buy every new bond. They're going to buy 8 to 12 trillion yen worth of Japanese government bonds per month under a stepped up stimulus that it announced today. So already they're saying that they're going to have to increase the amount. They just said they were going to print, and that didn't do anything for the economy. So what do? Instead of fixing things, they simply say, we're going to print more. And that's a pretty high number there, $108 billion worth in US dollars. That is definitely higher than QE3. And here they are. We'll see what happens, but I can tell you it's heading in this direction. Look at this article here out of CNS News. Electricity price index hit all-time high in January. I continuously show these statistics that month over month, year over year, things are becoming more expensive. You know what? When you look at the so-called asset prices of the stock market, you look at certain futures markets, they're increasing. But so is electricity, so is food prices, and this is simply inflation. And the real definition of inflation is the expansion of the monetary supply. Look at the Bank of Japan being one example. Look at the balance sheet of the Federal Reserve. It's continuing to increase. I'll move on quickly here. Personal spending. This is new data. I've showed you the previous ones, but you can see how healthcare is continuously becoming more expensive. People are not able to save up money, and I'll show you that in a moment, because of this, because they're spending too much money on the things that they are, in this case, forced to be buying. Look at this. Right from the St. Louis Fed's website, the personal savings rate has been declining for the past 40 years. The debt has been increasing, as well as the personal savings rate decreasing. People are in trouble right now, and they're not able to pay off the debt that they have been accumulating. The personal savings rate is an excellent indicator of the situation in the economy. Look at this right here. Out of Bloomberg, central banks are stooping to new lows to conquer weak inflation. The monetary guardians of the euro area, Switzerland, Sweden, and Denmark, are now imposing negative rates on bank deposits or on funding operations that feed through the real economy. Before I go on, I want to talk about this here. These individual countries are seen as being strong, but yet at the same time, they are actually paying out a negative yield. And what does this tell you about the real strength of the global economy? That's right, it is definitely very, very weak, very troubled. Analysts at the Commonwealth Bank of Australia reckon almost a quarter of worldwide central bank reserves now carry a negative yield. Money is losing its value rapidly, and this is one very interesting indicator that it seems to be almost positive in many ways. Look at Germany. They dish out a bond that gives a negative yield, and investors buy it up because simply they know that there isn't much real assets out there, so they have to get what they can take what they can get. This is from my book talking about interest rates. I have a chapter on interest rates. The lowering of interest rates is really just a crutch for the system. This most recent recession saw interest rates drop to the lowest in history. Never before has money been able to be borrowed so easily. And then this is the interesting part. The paradox is that we're in this trouble in this terrible position today because of the debt that we have accumulated. So all that's going to happen from all of the Bank of Japan's mess that they're getting themselves into, QE3, and all of the other business, we're going to look at more debt coming in the future. That's just the way it's been happening. That's the way it's going to be working. Now, all of this happens in secret, but it's different than what has happened recently. You may have seen this news. The FBI and Wilson County authorities are investigating the theft of an estimated $4 million worth of gold reportedly stolen during an armed robbery along the Interstate 95. This is real theft that is taking place that people can actually see. But the theft that goes on behind the scenes at the central banks, where they're printing up currency, causing inflation, stealing the wealth from the individuals. And then there are taxation schemes like Obamacare, like other taxes that are being imposed on the people, continuously increasing, slowly but surely over time, so that just like the frog in the boiling pot of hot water, they're not able to notice it as it happens. These are both examples of theft, but unfortunately the public is only able to recognize one of them. If you found this video informative, please give me a thumbs up. I truly appreciate that. And just to make a quick note here about the previous video, clearly some individuals are not interested in that type of information that I released, so I believe that I probably will not release another video like that in the future. We'll somehow just have to stick to the financial aspects. If you want to leave a comment down below about it, I'm certainly interested in your opinion here. And of course, if you want the latest, the greatest intel, you need to be an insider. The Insiders is where I give out all my best intel for free. That is available at themoneygps.com. You just scroll down to the bottom, fill in your email address, and you get occasional emails from me with good, short, concise info.